The sharpest mind in precious metals just made a call that should grab the attention of anyone who thinks they've already missed out on silver. Michael Oliver, the guy behind Momentum Structural Analysis, who predicted the '87 crash and has been reading commodity markets for 40 years, just dropped a prediction that Wall Street is completely ignoring. On December 16th, he told Palisades Gold Radio that silver's hitting $200 by spring 2026. We're talking April, May, June, not some distant future. Then, just yesterday, on January 12th, he cranked up his forecast even more. His exact words: "My floor is $200, but honestly, I wouldn't be surprised to see it push toward $500. $500 an ounce." Right now, as I'm making this, silver just touched $88.15, an all-time record. The surge Oliver predicted is unfolding right before our eyes. And when someone asked if it's too late to jump in, his response couldn't have been clearer. Nope. The breakout is only just kicking off. In this urgent update, I'm walking you through Michael Oliver's exact technical picture. I'll show you the momentum signal that's been spot on for 4 decades. I'll explain why he thinks those long, drawn-out corrections are history, and why dips now only stick around for days. And I'll reveal the chart pattern proving the silver market has permanently shifted. The banks want you believing you're too late. Michael Oliver is shouting that you're actually early. This is the story of the technical explosion that rewrites everything. Michael Oliver isn't some YouTuber hyping things up. He's not a retail pusher. He's not trying to sell you coins. He put in decades at E.F. Hutton's International Commodity Division back in the 70s and 80s. He learned under David Johnston, the comics chairman. He nailed the '87 crash both technically and financially. In '92, Wovia Bank's trust department brought him on for research. Within a year, he pivoted from brokerage work to full-time technical analysis. He turned Momentum Structural Analysis into a firm serving big institutional players. This is someone who puts his own money where his mouth is and has been in the game longer than most of us have been breathing. When Michael Oliver talks, the sharp money pays attention. And right now, he's more pumped about silver than he's ever been. Here's what he shared with Palisades Gold Radio on December 16th, 2025. The chat gets especially exciting when we dig into silver. I'm calling for a wild jump in silver prices, potentially hitting $200 by Q2. His call rests on his unique momentum analysis. Unlike price charts that can be gamed, momentum tracks the real muscle behind a trend. It's like checking the engine instead of the speedometer. According to Oliver's framework, silver just busted out of a decades-long holding pattern. That breakout mirrors what copper pulled off in the 2000s. Copper sat in a tight range for 20 years, then exploded, rocketing from 60 cents to $4.50, a 7-bagger in under 5 years. Michael Oliver thinks silver's about to pull the same move, just faster. And here's the kicker. Just yesterday, January 12th, he went back on record with the Living Your Greatness podcast and bumped his target up. Quote, "You're not seeing those months-long corrections anymore. Now they're measured in days. Frankly, we're expecting silver to reach. My baseline is around $200, but I honestly wouldn't be shocked if it gets close to $500. $500. Let that land." The same guy who called the '87 crash is telling you silver could 6 times from here. And he's saying this isn't guesswork. It's structural. The market's fundamentally different now. Let's dig into the technical setup Michael Oliver's seeing. His approach doesn't just track price, it tracks momentum. Momentum is the speed of change, the force pushing the move. You can mess with price using a few big orders. You can't fake momentum. Momentum needs steady buying from multiple players over time. And right now, silver's momentum is breaking records. Oliver uses something called a momentum oscillator. Think of it like an earthquake detector for markets. It picks up tremors before the big shake. Back in July 2020, Silver's momentum oscillator broke through a level it hadn't hit in decades. That was the signal. Price was still hanging in the 20s, but momentum was screaming, something massive is starting. Since then, momentum's only picked up speed. Oliver points out, we haven't seen a months-long pullback since the breakout began. That's unheard of. In every past bull run, silver would climb, then drop back for months, then climb again, a staircase pattern. But this time, pullbacks last days, not months. When silver dropped from $35 to $30 in late 2024, people freaked out. Oliver said it was just noise. The momentum never cracked. Price bounced back in 2 weeks. When silver dipped from $65 to $62 in early 2025, same story. Weak hands bailed. Momentum stayed rock solid. Price recovered in 72 hours. This tells Oliver something crucial. The buyers aren't casual anymore. They're not speculators who can walk away. They're industrial users who actually need the metal. They're sovereign wealth funds stacking strategic reserves. These buyers don't sweat 10% drops. They buy the drops. And that buying creates a floor that keeps rising every month. The technical term is a rising support line. Oliver says the current support is locked in at $60. Even if there's a flash crash, price won't stay under $60 for more than a few days. The floor is concrete. Now let's talk about the gold to silver ratio. How many ounces of silver it takes to buy 1 ounce of gold. Right now, that ratio is around 70. Historically, the average is 50. In bull markets, the ratio drops to 30 or even 20. Why? Because silver moves quicker than gold. It's more volatile, more industrial, more explosive. Michael Oliver has a chart tracking momentum in the gold to silver ratio, and that momentum just broke down. That means the ratio is about to collapse. If gold stays at $3,000 and the ratio drops to 30, silver hits $100. If gold climbs to $5,000 and the ratio falls to 30, silver reaches $166. If gold hits $8,000, which Oliver also predicts, and the ratio drops to 20, silver lands at $400. This isn't wild speculation. This is math. The ratio always collapses during precious metals bull markets, and momentum says it's happening now. Let me give you a real-world comparison. Back in 2007, lead was trading at 50 cents per pound. It had been stuck in the same range for 30 years. Then China's industrial appetite exploded. Lead broke out of its box. Within 18 months, it hit $1.75, a 3.5x jump. Michael Oliver's momentum system caught that breakout. He told his clients, "This is the start of a multi-year bull run." They made fortunes. Same thing with copper in the early 2000s. Copper bounced between 60 cents and $1.20 for 20 years. Then in 2003, it broke loose. By 2011, it was at $4.50. Oliver's system flagged the breakout at $1.30. Early birds made 3 times their money. The folks who jumped in at $2 still doubled up. The point is, momentum breakouts in commodities are explosive, and once they kick off, they don't quit until the supply problem gets fixed. But with silver, the supply problem can't be fixed. We've got a structural shortage of 200 million ounces every year. There are no massive new mines coming online. Existing mines are running low on high-quality ore. Recycling can't keep pace. This is a mess that'll take a decade to sort out. And during that decade, price has to control demand. The only way to control demand is to push the price so high that marginal buyers drop out. That price, based on Oliver's models, is somewhere above $200. But here's what should really worry the short sellers. Oliver says the stock market's about to tank. He's predicting the S&P 500 could drop 50%. Not a little 10% dip, a 50% crash, a total wealth wipeout. When that hits, money will rush out of stocks and pour into real assets: gold, silver, commodities, land. This is what went down in the 1970s. Stocks went nowhere for 10 years. Gold jumped from $35 to $850. Silver rocketed from $1.50 to $50. Michael Oliver thinks we're heading into a 1970s-style commodity boom, but turbocharged. Why? Because in the 70s, we didn't have solar panels. We didn't have electric cars. We didn't have AI data centers guzzling electricity. The industrial appetite for silver back then was a tiny fraction of what it is today, and supply was way higher. Today, we've got exploding demand and shrinking supply. It's the perfect storm. And Oliver's momentum indicators are screaming that this storm's about to hit Category 5. Let's talk timeline. Oliver said Q2 2026. That's April, May, June. That's 4 to 6 months out. Why so quick? Because of how momentum accelerates. When a commodity breaks out of a decades-long holding pattern, the first move is gradual. It takes years to build the base. Then the breakout happens. The first leg up is measured. Silver went from $12 to $30 over 3 years. That was leg 1. Then it takes a breather. Silver spent 2023 and early 2024 hanging in the high 20s. That consolidation is what Oliver calls building energy. The longer the consolidation, the more violent the next leg. Now we're in leg 2, the acceleration phase. Silver has jumped from $30 to $65 in less than a year. And Oliver says leg 2 is just warming up. In historical breakouts, leg 2 is usually 3 to 5 times the size of leg 1. If leg 1 was $12 to $30, that's $18. Multiply by 4, you get $72. Add that to the $30 base, you hit $102. But Oliver isn't using that simple math. He's using momentum divergence. And the momentum is showing a potential climb to $200 to $500. That's not a mistake. He actually said $500. Michael Oliver has a chart tracking momentum in the gold to silver ratio, and that momentum just broke down. That means the ratio is about to collapse. If gold stays at $3,000 and the ratio drops to 30, silver hits $100. If gold climbs to $5,000 and the ratio falls to 30, silver reaches $166. If gold hits $8,000, which Oliver also predicts, and the ratio drops to 20, silver lands at $400. This isn't wild speculation. This is math. The ratio always collapses during precious metals bull markets, and momentum says it's happening now. Here's why. In a true mania phase, commodities overshoot. They go parabolic. We saw this with oil in 2008. Oil shot from $70 to $147 in 6 months. Then it crashed. But for those 6 months, it defied all logic. Silver did the same in 2011. It went from $18 to $49 in 4 months. Then it crashed. But for those 4 months, anyone holding silver got wealthy. Michael Oliver thinks we're about to hit the mania phase. And in a mania, price doesn't care about fundamentals. It cares about one thing: fear of missing out. When CNBC runs silver stories every night, when your neighbors ask you how to buy it, when coin shops have lines around the block, that's the mania. And that's when silver goes vertical. Oliver says the market structure has fundamentally shifted. You don't get months-long corrections anymore. That's the signature of a mania. Once the mania kicks in, pullbacks are shallow and brief. Dips get bought instantly. The market refuses to go down. This is what happened to Bitcoin in late 2017. Every dip got bought. The price kept ripping higher. Then it hit $20,000 and crashed. But if you bought at $5,000 and sold at $18,000, you didn't care about the crash. You made 3.6 times your money. Silver's setting up the same way. We're at $88. If it hits $200, that's 2.3x. If you wait for a pullback to $50, you might miss the entire move, because Oliver says pullbacks now only last days. By the time you realize it's a dip, it's already back at new highs. This is the fear every investor on the sidelines is dealing with. Do I wait for a pullback that might never show up? Or do I accept that the market's changed and buy now? Michael Oliver's answer is crystal clear. Buy now. It's not too late. Let's address the big question: the miners. Michael Oliver isn't just bullish on silver. He's even more pumped about the silver miners. In his December interview, he said, "Massive surge for miners." He thinks miners could double relative to gold, while simultaneously benefiting from rising silver prices. Michael Oliver has a chart tracking momentum in the gold to silver ratio, and that momentum just broke down. That means the ratio is about to collapse. If gold stays at $3,000 and the ratio drops to 30, silver hits $100. If gold climbs to $5,000 and the ratio falls to 30, silver reaches $166. If gold hits $8,000, which Oliver also predicts, and the ratio drops to 20, silver lands at $400. This isn't wild speculation. This is math. The ratio always collapses during precious metals bull markets, and momentum says it's happening now.